Recently, I got into a discussion with one of my friends. Now, we were saying that the US market seemed to have a giant run-up over the past couple of weeks, and it's quite overextended at the moment. Now, we can tell that because the last few closing prices for the S&P 500 are very far away from its 50-day moving average, as indicated by the green line. So, does this mean that it's not a good time to buy? Now, if the idea were to buy low and sell high, surely you don't want to buy at all-time high prices. Now, the other thing here is it just me, or does the US market always seem to be at all-time high prices most of the time? Now, me and my friend, we were trying to predict how often the S&P 500 is at all-time high prices, and I casually predicted that the market is probably at all-time high prices at around 30% of the time. I wanted to find out the truth, so I went and did some quick research and found this article on the blog site A Wealth of Common Sense. And there was this article that talks about investing at market all-time highs, which I'll leave a link in the description below. They had a graph there that showed how often the S&P 500 is at all-time highs by year over the past few years. And surprisingly, the S&P 500 hit all-time highs a massive 30 times in the year of 2020. Now, this is around 12% of all trading days available in 2020 that the market is at all-time highs. And that's also with a giant dip in the market due to the disease going around and with all the shutdowns. Now, the market just completely bounced back like it was nothing at all. In fact, back in 2017, the market was at all-time highs a massive 62 times, which is around 25% of all of the trading days. So if you don't want to buy at all-time highs in 2017, you're basically not buying on at least a quarter of the trading days. Over the past 100 years, the market is at all-time highs around 5% of the time, with most of the all-time highs coming during bull markets. Now, we had a giant gap of no new all-time highs after the dot-com bubble and after the Great Housing Recession, which again should not be too surprising. Now, the market is at all-time highs, a bit less than the 30% that are originally predicted, but it still comes out to be quite a lot. The question that remains is that should you be investing at all-time highs? So in an article on JP Morgan, they looked at whether or not it's worth investing at all-time high levels in the market.
They looked at the past 30 years to see what happens if you just invest on any regular day compared to what happens when you only invest when the market is at an all-time high. So after 1 year, if you invest on any regular day, you get an expected return of around 11.7%. However, if you invested at all-time highs, you'll actually get a 14.6% return after 1 year. And a similar thing is happen when you invest for 3 years. If you invest on just any regular day, you get a 39.1% return compared to a 50% return if you invested at all-time highs. And it's the same pattern continues when you invest for 5 years. You get a 71% return on a normal day, but around a 79% return if you invest when the market closes at all-time highs. This means that you are even better off when you invest at all-time highs. Now, this is just completely mind-blowing to me, but it just goes to show that the market works in weird and wonderful ways, and it's just highly unpredictable.
The real conclusion is that the market is and will be at all-time highs fairly often, and you should not be afraid to invest when the market is at all-time highs if you have a long-term investment time frame. Of course, there will always be the possibility that the market will crash immediately after you invested. Now, you know what they always say, the past results does not indicate what would happen in the future. But realistically, the odds will be in your favor if you have a long-term strategy. Now, don't forget to check out my other videos on the stock market and where to invest and get some sign-up bonuses while you are there. And I will catch you in the next video.